Well, good morning, everyone. Welcome to Long Verticals and Diagonals. My name is Barbara Armstrong. I'm a coach with Schwab, and Connie Hill has a well-deserved day off, so I am filling in for her. I know we'll miss her fabulous red hair today, but she will be back next week. So you can look forward to that. And today we're going to talk about verticals. I know Connie has been talking a lot about diagonals of late. I filled in for Connie last week. We placed some trades. We're going to follow up on those. And then with what we do today, I will be following up on these trades in our Trading a Smaller Account class, which typically meets on Fridays and Mondays. Now, tomorrow is National Investing Day, so we have a special day of curriculum planned for you. You'll want to get registered for that. Scott, if you can put the link in so people can register if they haven't already. We have Scott Thompson with us in the chat. He's a friend, he's a fellow coach and a manager on our team. And I've learned a ton from Scott over the years. So if you've got questions, don't hesitate to type those in. But yeah, follow up on today's trades will be in that trade management class. I invite you to follow me in the land of X if you aren't doing so already. My handle at Barbara Armstrong CS. I'm also now on LinkedIn, so you can wander over there and find me there as well. Scott is Scott Thompson CS, so you'll want to follow Scott as well. Before we get into the thick of things, just know that options carry a high level of risk and aren't suitable for all investors. We're going to do a little risk management today, and we're going to review some trades. And yeah, I'll talk more about that in a few minutes. We're using the Paper Money software application on the Thinkorswim desktop platform. And one of the nuances or differences between Paper Money and a live account is that short options will never be assigned early in Paper Money. That can happen in a live account. And so we need to be aware of that. Okay. So we're going to get out to the Thinkorswim platform. And just as we do that, I want to thank everybody that comes here to these webcasts live, because it just makes me smile. There's a lot of, kibitzing in the chat. But you guys really help bring a lot of positive energy to these, and I appreciate that. So to all the usual suspects, thank you for doing what you do. And if you're here for the very first time, please feel free to type a greeting into the chat so that we can welcome you to this community. So to John, the Noble Savage, and Wacky Whack, like some of your names your handles are pretty funny, and Sia and Richard and Will and Kevin and Charles and Josh and the rest of the gang, Kelly and Riceberg. Thank you all for being here. Okay, so moving on, our S&P 500 is like within a stone's throw of the all-time high for this index, and so it's pretty hard to characterize this as anything other than bullish, right? Right, just nod your head in agreement there. And yesterday we had 4 of the Mag 7 come with earnings. We had Google, Microsoft, Amazon, and Meta. 2 crushed it and 2 were crushed. But still these indexes are up today. And the NASDAQ hitting a new all-time high today. When we look at the Dow, we have a bullish engulfing pattern on the Dow. It's still a little ways away from the all-time high that it hit back here in February, but it's heading in the right direction, correct? Correct. And then how about our small caps? And that hit a new all-time high, back on the 21st, so just over a week ago. And we've got this candle pattern here that those of you who are technical analysis buffs would call a morning star, because we had a big down day. Actually, maybe it's not exactly a morning start. This candle should be more of a doji pattern, but then, moving to the upside again today. And if you're newer to technical analysis, we teach a getting started with technical analysis on Tuesdays. You may want to check that out. And then in the morning, I'm not going to do a really detailed market overview because Kevin Horner does a class 4 days a week. He did one this morning. I was in the chat, and I know many of you were there, but he does a great market overview at the market open. It's called Trader Talks. Those are archived, so I'd suggest you go there if you want a more detailed market overview on a daily basis. You might want to put that on your calendar. And then lastly, let's just look at the VIX. Okay, so the VIX is now like comfortably under 20, and it was only like, not the day before yesterday, but a couple of weeks ago, we were up here in the nosebleeds around 30. And so this is showing, really a lot of confidence. And when we're looking at a buying strategy, this makes options less expensive, so that can be appealing also. Okay, so let's start with Apple. And I have just re-recorded a long call vertical example trading plan, and I will show you where you can find that. And this just gives us a framework. And just a couple of weeks ago, when I taught this class, let's come over to switch our gadget and we'll come to our scratch pad. We created an example trading plan. And one of the things that we didn't put in here, but it was avoid trading over earnings or a big announcement, like a big product announcement or an FDA, verdict on whether something's being approved. But the idea is that you create these like 5 sections. And this is just an example that provides a framework from which you can create your own trading plan. And so we're looking at, what to buy, when to buy, how much to buy, when to exit, and then what your daily routines are. And with Apple, if we look at this, it was kind of consolidating. Then we had this breakout and it's bouncing off this old horizontal resistance level, which appears to be acting as support. Now, if we have this avoid trading over earnings, when is earnings? Well, that would be today, my friends. And so like if it gaps up like Amazon did or Google did, you might be a happy camper. But what if it goes the way of Meta or Microsoft? Then you've got, more than a 50% loss potentially. And so, if our guideline is we're kind of trying to arrange things so that we're picking up something that is bouncing off a support level. So, this could be one of our when to buy. So it might include a bull flag, a horizontal breakout, a diagonal. We could add to that a bounce off support. And this isn't the complete list, but it's a bullish technical entry. So we're looking for a bullish technical entry on the chart. So we have all of this, but what is killing it is we don't want to trade this over earnings. Okay. Okay, so let's then move on to JP Morgan. So when we go to JP Morgan, okay, well, it's already had earnings, right? Right. We had this pullback, like the whole market seemed to be pulling back. We were kind of in correction territory in the markets. And then, we had this V pattern, but on JP Morgan, this gapped up and it's held that. But when I look at this, does it look like it could continue consolidating? And if the answer to that is yes, then is this one like we already have an example short put vertical trade on and it's doing just fine? But do we want to place a directional trade on this? In light of the fact that it looks like it's continuing to consolidate, well, we might say, well, could we find something that is trending more, that is in more of an uptrend, than this? And it might take off tomorrow and we can look at this again, on Monday, but we're going to say no to that. So why have I looked at 2 trades that we've said no to first? And it's because I get asked a lot, how do you find, the stocks that you trade as examples? And I go through a lot of, oh, this looks delicious. Oh, but earnings is today. Oh, this. And so one of the things that I did is I pulled up the NASDAQ and I just said, okay, let's look at anything that doesn't have a blue dot beside it. And started that way. And that's how I found CSX. No blue dot. Okay. Earnings. Did it beat on earnings? It did. And, you know, it gapped up, it's come back, which does not require confirmation. And you might say, well, you say Harami, I look at this and I see a doji or a spinning top, and that does require confirmation. And so you can look at it either way. But when we look at CSX, it's up 24% year to date. So it's definitely outperforming all the major indices. And you know, it gapped up on earnings. It's come back basically to, you know, the start of where it gapped from, and appears to be holding support. It's at 44.90. So if we come to the trade tab, could we come out, you know, we could come out to June, you know, and you know, if we're coming back to our recipe and saying, okay, we want a stock that trades 1 million shares a day or more. Now, your trading plan might be 5 million, you know, but if we go with 1 million, we have a check on that. Let me just make sure I've got this where I want it to be. Okay. So we've got a check on that. Then when we look at our bid-ask spread, we want it to be tight, so less than 10%. So if we come down to June, another thing that we have is, do we have at least 20 times the number of contracts we want to trade? Well, if we're looking at the 44 and the 45, we have only 14 contracts on this weekly. And we also have a 35-cent bid-ask spread. And if we want it to be less than 10%, you know, we want that to be like 20 cents or less. So this one doesn't meet. But if we come down here, we've got thousands of contracts. We've got here a 15-cent bid-ask spread. So if we're okay with this, we could say, okay, well, when we're looking at, we have a technical entry on the chart. So we're good with that. It's come back to, you know, it's bouncing off a support level. It trades 1 million shares. We've got this, we've got this. We're in this 20 to 50 day time frame. Check. Earnings has already happened, so we're good to go. And then with respect to our risk, we just went with this example of $500. Now, if you watch that example trading plan video, I go into more detail. Like if you have $1 million account, so in our account that's $500,000, our risk per trade is 2,500, which is half of 1%. So why is this disappearing? I don't know. Or it could be, I want it to be half of 1% of the account value, or 1% of the account value. In our trading a smaller account, we went with 2% of the original account value, you know, which was $500. Okay, so there we go. Okay, so if we look at this and say, okay, if we do the 42.50 and the 45, it only has to go up 14 cents and then stay above that for us to ultimately, you know, have a successful trade. So this is at $1.68. So how much can we make? We can only make 82, and that's not, you know, usually we kind of look for a 1-to-1. And if we were looking for a 25% gain, and we said, okay, 168 times 0.25, sorry, 1.25, $1.68 times 1.25, that would be 210. So here, if what we are typically going for is 50%, that would pretty much be max gain, which would mean we'd have to stay in it right until the bitter end. And so there are some rules that we don't break, like our max risk per trade. We might go to 525 or 550, but we're not going to go to 1,000. But this rule, we have some flexibility with. And so maybe with this one, we might say, well, we'd be okay with taking a 25% gain, you know, on this one. And so if we take our $1.63 and we multiply that by 1.25, that would be 204. And so if we're risking $1.63, because we could lose this entire amount, if we do 3 of these, how much are we risking? 489. Is that less than 500? It is. Okay. So yeah, SIA, our goal is a 50% gain over what we paid to get in. And in this one, this is an example of us massaging a rule that is massageable. You know, where this rule, and one of the things about this rule, and we're going to talk about this more, Scott calls this, does this meet your sleep number? So if we had one trade go wrong, you'd say, okay, I'm cool beans, like that's okay. I'm not going to lose any sleep over losing $500. What if you had 10 trades in a row go wrong, or 5 trades in a row go wrong? Are you still sleeping well? And if your answer is no, then what you might want to do is change this and make your risk a little lower. Okay. So we're going to do 3 contracts. We're going to come to our single order, make it our first trigger sequence. We're going to say, hey, if this gets to 204, let's make it 205 because it's gone up a little bit in price. So that's the thing about being live in the market, is prices keep changing. So it's saying, oh, 210 would be 25%, good till canceled, confirm and send. And on this one, this is a 25% target. Okay. We're going to put that in there. And we're going to put this in our long call vertical group. Okay. Okay. So that is CSX. Let's now look at UNP. So UNP, has it had earnings? It has. You know, and so it beat on earnings. And this is where you might want to come up. And I tend to leave this up, live news. And why do I do that? Because when I see that it beat on earnings, obviously the street, responded well. But, what are the analysts saying? And, well, Rothschild, adjusted their price target to 299. Where is it currently trading? 265. So, JP Morgan raised their price target to 275, TD Cowen to 282, Barclays to 315. It's like raising. So even though the price targets, there's some variation, 274 to about 307, they're all raising it. And it's every one of these price targets is higher than where it's currently trading. Not that, all of these guys are right or any of these guys are right, but this is what they do for a living. And then when we look at the chart and we say, okay, well, it gapped up and then it pulled back for a couple of days. What pattern would we call that? Again, we'd call that a bull flag. And, today, now this was a bullish engulfing pattern when I first looked at this. We can see, at one point today, it went all the way up to here. So that made it a bullish engulfing. So to place this trade today is aggressive from a technical analysis perspective, because, we don't have a confirmation candle. If this were a bullish engulfing, it doesn't require confirmation. But if this ends up closing the day as an inverted hammer, then technically we'd want to wait until we saw it trading above the body of that candle. Okay. So, but we're going to, because we get to meet today and not tomorrow, we're going to go ahead and put this in, and we're going to make a note that this is a more aggressive entry. Okay. And we may end up eliminating it when we get to the, this section, but we have a bullish trend. It's up 14% year to date. And, one of the things that we say, in the example trading plan, and, your time is kind of the essence, but you want the stock to be uptrending. And you also want that sector to be uptrending. And the market uptrending. So we've already looked at the market. And if you're saying, well, UNP, I'm not familiar with this company, it's an industrial company. So if we come over here and say, well, here's our sector indices, and here's industrials. So, it pulled back along with the rest of the market, and then has it, been moving to the upside? Yeah. Yeah. So if we look at these and say, okay, well, so stock is uptrending, check. Does it trade 1 million shares a day or more? Well, we can come over here and hover, and like, okay, 200 million contracts, shares traded 59 million. When we come here, oh, this is the S&P. Sorry, I'm thinking that seems awfully high for UNP. Okay, so we're at 500,000, but we're early in the day. So if we look at, and that looks like nothing on this chart. If we look at yesterday, it was 2.2 million. So it does trade over 1 million shares a day. So again, we can put a check on that. If we're just going and like, okay, nerd alert, I'm going to make a confession here, and you are not allowed to tease me when you go to the next live event. But when we looked at this and said, okay, so it does trade more than 1 million shares a day. If we come out to June, do we have, and this is open interest, number of contracts on the books when the market opened, volume, how many were traded today? Can I move that? There we go. Okay, so when we look at this, check. Do we have the volume? Yes. Market's uptrending. Check. We've got this. Is the bid-ask spread 660 to 710? That's 50 cents on a $7 contract. So that's okay. 910 to 950. That's 40 cents. So check. Okay. Why is this stuff disappearing? Let me just come in and look. Okay. Let's see if it will stay now. Check, check, check. Time frame 20 to 50 days. Check. Has earnings already happened? Yes. So now, would this contract make sense? Now, what we tend to do is we're modestly bullish. Well, what do I mean by that? Well, like with the last trade, it only had to move up 20 cents. Here, what we're trying to do is bracket. So say, well, we could do the 265, 270. It has to move up $5, but it has 50 days to do that. Okay. And then, oops, let me bring this up again. And when we come back to the chart, this ATR says, well, in an average day, this thing can move, has moved on average, $5.75 in a day. So like if it moves that far up and stays up that far, then, we're doing, it will do for us what we need it to do. Okay. Okay. So the other thing we could do, and some traders would consider that, is say, well, what if I did the 260 and the 265? It's already through both strikes, but we're going to pay a lot more for that. But, it doesn't hurt to look, but we're at 285. And you say, well, 285, if I went for 50%, that's 280 times 1.5. That would be 420. And it's got, and we're already through both strikes. Where if we went for the 265, 270, it has to move further. Oh, sorry. Here we go. Uh, 260, 265. Okay, sorry, I wanted to do 265, 270. So here I'm only paying 30 cents less, but it has to move up the $5. And then here we'd be out at 375 instead of 410. So if we said, well, it's a higher probability of success, and let me make sure I was on the right expiration here, you know, I've got a 10% higher probability, sorry, a 41% chance of it being above 270 come June 18th. I've got a 50% chance of it staying still above 265, you know, by the 18th of June. So if we looked at 260, 265, so 285 times 1.5, now that's 427. Okay. First trigger sequence. So if we do 2 of these, how much are we risking? 540, if we're okay with that. No, that would be 580. So we're only going to do 1 contract because we're not willing to risk almost $600. And that might be another thing that would sway you if you're really bullish on this, to say, well, if I did the other one, then I could do 2 contracts and ultimately I could earn more. You know, and so these are the things that a trader has to consider. Okay. These are the things that you have to consider. And so if we said, well, you know, how much would we make here at 290 to 427? We'd make about $145. And with the other one, you know, we'd be looking at making 250. And so if you were bullish, you might say, well, then I'm going to do that. I'm going to stick with this one. And I'm not, you know, waffling back and forth and changing my mind here. I'm trying to make an informed decision, right? And so if I say, oh, at 250, then, you know, I'm leaving $125 a contract on the table, but I'm out, I might end up out sooner. Okay. And if I do 2 contracts and I can make 125 on each, then I'm making more. And, you know, because I can take the risk of doing 2 contracts and I'm at $500. And then I come in here and I make this 375. So that's what we're going to do. And that's kind of the thinking behind it and why we're making that decision. Good till canceled. So we're risking 500. And we're putting it in our long call vertical group. Okay, now here's where I was doing the gallows walk today. And what do I mean by that? Like, I was kind of dragging my heels. Sorry, I've got a tickle in my throat. Because our routine is to daily check our positions to see if they are close to either the target or the exit. And another thing that you might add to your daily routine is to look for new setups. I call them setups or potential entries. You know, so you're, you know, if this is a strategy you like to trade, then that might be part of your routine, is to daily look at the stocks that are part of the NASDAQ or the Dow or the S&P 100 or whatever your watch list might be. You might have a customized watch list. But why was I doing the gallows walk on this? So we've got a trade now on UNP and one on CSX. We looked at Apple and JP Morgan. And we have a couple of others to look at. But when we look at our current long call verticals, there's a lot of red here. You know, but what are we really looking for? Well, what we're looking for is anything up close to 50% or down close to 50%. And Dell is down 58%. And so let's look at Dell, because our daily routine is, if this is down more than 50%, we exit the trade. And we put the trade on this day. So when we go back and look at this, you know, so that must have been last Friday. So when we look at this, did that look like it made sense? Well, yeah, that did. It's an uptrending stock. It had a 1-day pullback, moving to the upside, moved up the next day. And then, we've had 3 down days. Now, this may bounce. Yesterday, I looked at this. It's like, well, it may recover. Not recovering. Now, we can place a new trade, but our rule says if it's down 50%, we're exiting. And this is when it's tempting to start succumbing to some of the 4-letter words. Hope. This, I'm hoping it's going to go back up. Hope is a 4-letter word, my friends. It is not a trading strategy. So we are not trading on hope. But if it goes back up, I'm going to miss out, and I'm now locking in a gain. You are. Fear of missing out. 4-letter word. We are not doing that. Yeah. Like I'm a very hopeful person. I'm an obscenely optimistic person. Yeah. I do not trade based on hope. I trade based on rules. And when I said nerd alert, so when I created a trading plan, I created a checklist, like no joke. Like when I very first started, I created a checklist, and I would literally say, okay, is this an opportunity? And I'd go through and check them all off. And now I don't do that. But when I first started, like I created a recipe and I followed it. And so this says get out. And so we're going to get out. So we're going to come to Dell because that's what our rules say. And, the plan was to get out when it was worth $1.95. But you know what? Getting out at 62, it beats getting out at nothing. And so, and you know what? You can argue if you like. It's pointless because, I can't hear you. But I would call this a successful trade. It's just a trade that didn't make money. Now, why do I call it a successful trade? It's because we had a recipe or a trading plan and we followed our plan. And so we've changed this. Where did my Dell go? Oh, it's now saying 77.50. So, this should fill. We'll let it percolate, but I'll make sure that we end up exiting that trade. And then on tomorrow and Monday, so every day we're going to look at this. And you might want to come and look at all of them. It may be part of your daily routine to say, okay, here we are. And where's I thought I had gone through and methodically put them all in. Let's see where C is. 130, 135. So we put it on this day. And where we want it to go, oh, I just had do not show. So we want it to come here, but it's kind of basing. And today we have a candle pattern that's saying, it's not down 50%, but we have a bit of a bullish engulfing pattern here. So we'll let it percolate. So that was C, CrowdStrike. And again, we had a basing pattern here on CrowdStrike. It broke out. It's continuing to test this old resistance level as a new support. We have a hammer or a doji. We have a hammer pattern here at this support level. And we're just going to be patient and follow our rules. We've already looked at Dell. So we wanted this to stay above 390. And this is where we did that. Probably when we put this trade on, it didn't have to go very far. It just had to stay there. And it's been kind of going sideways. I mean, our expectation was, we had a couple of big days, was that it was going to continue to move. But sometimes, like if you've ever biked up a big hill, sometimes you want to coast for a little bit, before you continue on up. So we're going to just sit on our hands. We've done what we needed to do for that. Goldman Sachs, we have an inside day today, which is bullish, and we've got, 16 days. Okay. LRCX. And guys, like, I was tempted not to review these with you because there's a lot of red there. But how many of you have ever seen a big down day in the market? You have a lot of bullish positions on, and you've said, you know what? I'm going to walk the dog today. I'm going to go and golf. I'm not even going to look at it. It's like you're going with the head in the sand approach. I encourage you not to do that. And so not only did we bring it up, but I'm going over them all in detail, and this is why. Okay. Okay, so LRCX, that's bouncing today, heading in the right direction after a pullback that we didn't expect to see. And Walmart. And so with Walmart, we did too. We put them on this day. It broke out of this basing pattern, kind of an inverted head and shoulders. And we did one at 131 and 132, and then one that was a little more directional. We may be rethinking that decision. Right. So that's where we are on that. Okay. So let's look at another potential trade setup. We have time for another one. Oh, and so with this one, again, up 19% year to date, like outperforming all the markets. It was basing for months and then broke out and then just kept on going, had a little pullback, came up, moving again. And so, like, could we look at this 412? Could we do a 410, 415, or are they $10 wide? So if we come here, we're at 412, we'd have to do 410, 420 if we come out to June. But this is pretty heavily traded, 7 million shares, AVGO, part of the tech sector. How's the tech sector been doing? Not too shabby. Like, it's been crushing it. And so if we look at that and go, okay, market's close to all-time highs, tech sector is strong, this stock is strong, so we're just going with that momentum, right? Right. And if we say, okay, well, this previous high was 430, we're at 412, or we could come in here, our bid-ask spread is acceptable here. It's about $1.50. And even here, this is 60 cents. So the bid-ask spread is tighter and we have more contracts, but then we'd have to do the 410, 420. So it has to go further than if we do this 410, 415. So if we look at this 410, 415, that's 270. So it's got to move up, $3.40. But if we said, okay, we could do two of these, single order, first trigger sequence, 260. Feel free to be impressed with my superlative math skills. Let's call that 395. Well, it keeps moving up. So that's maybe not a bad thing, but we're wishing I had talked less and got in faster, right? 405. Good till cancel, confirm and send. On call vertical. So in our 45 minutes today, we showed you like how you can quickly like tiptoe through the earnings tulips. We reviewed to find potential setups. We reviewed an example trading plan. Now, if you want to just a shorter version of, how to create an example trading plan, if we come to Trader Talks, and so you're going to want to subscribe to the Trader Talks channel. If you haven't done so already, there's a tab in the bottom right corner there that you can click. And when you get to Trader Talks, Trader Talks from Schwab Coaching. What you're going to see first is what's currently being taught. If you come to playlists and scroll down, I am in the process of re-recording some of these. There we go. Trade management mini sessions. So there's a whole pile of short candlestick videos. There's 13 so far in that series. There will probably be 18 or 20 by the time I'm done. So we have one for long put verticals, and these are kind of aging out. And even though they've got thousands of views, these will eventually all end up coming down. And so I'm recreating new versions of them. So probably by the beginning of next week, we'll see the long call vertical one back here. Okay, the other thing I want to point out, so I got introduced to this world of investing through a live event. And if you've never been to a live event, you may want to check it out. So, you come to in-person events, and we have several coming up. So in a couple of weeks, we're doing our first market drive of the year in Chicago. I've been to several Chicago for several events. I'm looking forward to seeing many of you there. And then there's an event in Santa Clara. That registration for that is closed. If you do come, we will register you on site. But these are very popular. There's no charge to attend. We'll have the coffee on in the morning. We'll provide breakfast and lunch. But if you want to come, don't dilly-dally, like sign up. If you can't come, you can always deregister. But we have stuff coming up throughout the rest of the year. Okay? Okay, so that's that. There is a survey in the chat. So my ask is that you click on that link. There's 2 questions. 1, I hated it. 10, I loved it, and I'm going to keep coming back, and then everything in between. You also have the ability to put in comments. And my promise to you is that both Scott and I will read each and every one. Yeah, so yeah, feel free. Let me know. Did you like the pace? Would you like to see more of this or less? I'll also pass all of these on to Connie, because she'll be back and is the person who regularly teaches this webcast. If you hit the like button, it moves things up in the algorithm so that you've got it moves things up in the trading algorithm so that more people can, or in the YouTube algorithm, so more people can find this content. So CB is asking if I'll be teaching trading a smaller account when I'm at the events. I will sometimes, like I'll always teach them on Monday. On Friday, like when I go to Chicago, I'll get up Friday morning and teach that event. That's a Saturday event. If I'm on the East Coast, I will likely greet everybody at the event and then go teach my class and come back. But when I'm in California, that class happens like right as we're getting everything going. So I usually will have Connie fill in for me on Fridays when I'm doing an event that starts on Friday in California. So there's a long answer to that question. And yes, we are coming up. We are going to be in Hawaii close to the end of the year. So if you want an excuse to go to Hawaii, now you have one. So guys, thanks to Scott for being in the chat. Thank you to the people behind the scenes for helping bring this to life. And just to reiterate, somebody asked if we got out of the Lam research trade. No, we're still in it. We're down 40%, but it's kind of rallying today. So we're still in that. The one that we did exit was Dell. And I'll make sure that we end up out of the Dell trade. Well, now we're down 40% on Dell. So we wouldn't have ended up exiting today. But you just make the best decision that you have at the time. But we did place 3 new trades, one on CSX, one on UNP, and one on AVGO. And these were all long call verticals. So guys, thanks for tuning in. Tomorrow you're going to want to attend. It's National Investing Day. You're going to want to be there for that. But up next is Trading with Dividend Stocks. So stay tuned. Lots more great content coming your way.